The dollar Swiss is lower in trading here today, despite a decline in CPI out of Switzerland. It was minus 0.1% year on year, 0.4% by the way. That news did not impact the Swiss franc in a negative way. Perhaps the technicals are leading the charge. I'll go through that in this video, so let's get started. Of course, it takes two to tango, and we're seeing U.S. yields move lower despite higher CPI or PPI in the U.S. So go figure out the fundamentals for that. But what we have seen in the dollar versus Swiss, clearly from a technical perspective, is that in trading yesterday, the price came down toward the 100-hour moving average, found support buyers, and then support buyers within this swing area through here. Toward the later in the U.S. session, that pushed the price up toward another swing area up through here, where we found willing sellers against the high price, not from yesterday, not from the day before or yesterday, but the day before yesterday. I guess that's Tuesday's trade, and that stalled the rise, and we saw pretty much a trend move to the downside. That break below the 100-hour moving average, break below the swing area, 38.2% retracement of this move to the upside also helped contribute to the downside. And then we traded above and below the 200-hour moving average here before deciding, well, let's go even further, in which case we took the price below the 50% level at the 0.9081 level, moving all the way down to this swing area down through here, where we finally found willing buyers against the lows. Again, this comes into the backdrop of lower or as expected CPI in Switzerland, minus 0.1%, 0.4% year on year. Meanwhile, US PPI came in stronger than expected, and maybe that's helping to push the dollar back to the upside after moving lower after the data. So very crazy picture, but we are seeing, I guess, a little bit of a rebound off the low prices here, which is more consistent with the inflation data coming out of both countries. Now, the sellers still remain in control with the price below the 50% and also below the 200-hour moving average. That's the green line in this chart, 0.9092. It's going to take a move above both those levels to increase the bullish bias for the dollar versus Swiss. Get above those levels, and things start to look a little bit more, at least neutral, for the pair, with other levels on the top side, including the broken 38.2 and the 100-hour moving average as resistance to get to and through to further increase the bullish bias, like we saw here over the last 4 or so trading days. So overall, today in the short term for traders, the bias turned more to the downside, with the price movements below the moving average, below 50% retracement. We'll see if that shift in the bias continues in trading today with a move below this level, but the fundamentals probably point the other way, don't you think? Anyway, that's my look at the dollar versus Swiss. Good fortune with your trading. Bye-bye now.